Your friends at the Federal Reserve just recently said you don't have to worry about an increase in interest rates. We are way off. And now suddenly they can't do it fast enough. But let me tell you, if they do increase interest rates, the economy and the stock market are going to need some help. The first thing I want to look at is at what the Federal Reserve has said. Now, you've heard what Jerome Powell had said. You had heard what was in the statement, the official statement of the FOMC. But I'm going to show you some other updates that I think are critical. The second thing is the inflation breakdown. Yes, you see the headline number, but what is it all about? I will show you some information surrounding that. And is it possible to see $200 a barrel oil? Some are making bets according to that very price. I've got all of that and more. Let's begin. Let's start right here. Fed's Mester would back a March rate hike to fight inflation. Take a look. You could see Fed's Bostic said there's 3 hikes, fast balance sheet runoff needed for inflation fight. You look at Daly, Mary Daly, joining the ranks of the officials publicly discussing an interest rate increase as early as March as the central bank seeks to combat the hottest inflation in a generation. Quote, I definitely see rate increases coming as early as March, even because it's really clear that prices have become uncomfortably high. American consumers are feeling the pain. And this one right here, part of the same information. This is actually Daly saying, it's really time for the U.S. Central Bank to start removing some of the accommodation that we've been giving to the economy. I definitely see rate increases coming as early as March even. They are not saying that they are definitely doing this. That hasn't happened yet, but we are 2 months away from this taking place. I have to wonder how the economy, forget about the markets, how is the economy going to survive when rate increases actually happen? You've already seen around the world increases in interest rates. The last time I saw it was above 50 rate increases for 2021. I need to get a tally for the total year and then into 2022, but it's more than you think. Central banks around the world have increased interest rates and actually surprised many, different areas. Suddenly they said, well, okay, now we need to increase. But the funny part was literally just a few months ago, they had said, we don't have any reason to increase rates. Why? Because our activities don't have an impact on it. Do you remember that? They said, we're not going to do that. What we're doing here, the quantitative easing, the reducing interest rates, does not create inflation. What we are seeing here is simply temporary. And that was a few months, and then a few months later, and then a few months later, and a few months later. And now they are simply just saying, well, okay, fine. They're giving in because they realize that their actions are, in fact, creating this. Or could it be that they are trying to create a crisis? No. GPS, don't say that, GPS. Do not say that. All right. Fed's Powell says the economy no longer needs aggressive stimulus. I had brought this to you in a previous video. Just wanted to show you to round this out before we move on to the inflation section of the video. To give you an idea, you had this statement that initially came out. Okay, they're looking, maybe at increasing interest rates, and the meeting minutes came out. It was even stronger, or hawkish, as they love to call it. And then you go a step further with all of these people from the Federal Reserve basically saying the same thing, that, yeah, it looks like March. But just a few months ago, they had said, no, it's impossible. And I know what you're thinking. They're never going to do that because that would create a crisis. Would create a crisis, eh? You don't say. All right. Now you've seen the news. Inflation is up. Wherever you go, inflation is certainly going higher and higher. This just gives you a breakdown of the year over year and month over month for the CPI. 7%. We haven't seen levels like this since the 80s. Now, is it going to go to the levels that we saw back in the early 80s? I don't know. I mean, it was up to 15% for this particular stat. I don't know. Are they ever going to allow it to show that? I mean, the calculations are different now. Things are different now. But you can see, let's break it down a little further. CPI, less food and energy, because you don't want to include those. Those are volatile. Yes, that's right. Even doing so, 5.5%. Then you've got the top 5 subcomponent contributors to US CPI year over year. Looking at it, gasoline is in there. Certainly, we saw a big change from 2020 into 21. And used cars and trucks is a big one. It still is a big one, but maybe you're not buying a used car or truck, so you're not affected by that, right? But rent and shelter, that has increased considerably. And there are a lot of people who are in an area where the rent is in a controlled environment. Some places have taken that away. Okay, that was a temporary thing. Some places have said, okay, we're done with that now. Rents have gone up massively, and so have the prices of homes. And of course, they don't use specifically the prices of homes to add into their breakdown. Okay, it doesn't work like that. It's an equivalent. They give you this equivalent statistic, which is very, very skewed, and it would be a very different calculation should they include the real figures, because you don't pay owner's equivalent rent. You don't do that. You pay rent or you pay your mortgage. Now, what's going to happen if suddenly interest rates increase? Well, you're going to have people in the US, if you're, in that mortgage, you got that fixed debt for a long period, they're just not going to move. They're going to wait. They're going to say, I'm not moving, I'm staying here. Less transactions, less economic growth, less building, less so on. If you're in a place like Canada, where you've got to essentially renegotiate every 3 to 5 years. And there's other places, I've seen your comments before, other places do the same thing. So you pay it off over a 25, 30-year period, but you are actually then, essentially renegotiating after that 3 to 5 year. Interest rates are higher. What are you going to do? Oh, well, now I can't afford to pay that price. That's not good. Look at this. You can see the US CPI, commodities, less food and energy, and services, less food and energy, both very, very high. I mean, we can go on all day, okay? The important part here, you as the individual, your real, not the fake, not the nominal, but your real average hourly earnings are down significantly over the last year, the entire year. Down, down, down. Why? Because inflation is so hot. And that doesn't feel good. That isn't a good thing for so many people, okay? And we break down a little further. I want to talk about oil. I want to highlight what's been happening, because it's not just the price of oil as a commodity, and it isn't even the step further where we look at it with gasoline. No. You've got to understand here that everything revolves around oil, whether we like it or not. The price of oil is a contributing factor to transportation costs. Your food prices and any product that you need is probably going to be in some way dependent on the price of oil remaining reasonable. If the price of oil goes, let's say, above 100, maybe to 200, this is potentially a catalyst for recession. Look at what happened with the boom in commodities 2007 into 2008. Now, there were so many things happening. The housing crisis, the subprime. You looked at the financial crisis that happened. I mean, just chaos. But at the same time, you had commodities becoming so expensive, particularly oil. I think it peaked out at $147 a barrel and change. And that hits home. There's no doubt. Oil rallied to continue in 2022 as demand outstrips supply. At the bottom here, they're just saying oil prices rose 50% in 2021. JP Morgan expects oil prices to overshoot to $125 this year. Well, if you look at it, there are people that are making bets that oil will, in fact, hit $200 a barrel. Now, I don't know if that's the case, but you just have to understand that things get way out of whack. If you had said January 2020 that lumber is going to be $1,700, would anybody have bet on that? No. But it happened. It happened for a brief period, but it happened. Imagine with something as important as oil. Now think about any commodity and how this could affect and impact you as the individual. And I will talk about this in just a second of what we should be doing. Inflation could ease and Americans would shift more of their spending to services such as travel, eating out, and moviegoing that would reduce the demand for goods and help clear the supply chains. That's the expectation, right? That's what they're saying. But some higher prices, such as rents, could prove to be stickier. Rental costs, they've accelerated. This is the third monthly increase. That's significant because housing costs make up 1/3 of the government's CPI. Like I said, if it was using the actual real stats, I'm sure it'd be so much worse for many people out there. We have to understand that there's certain data that's only going to give us a piece of it. That's why I cover new information every day. I track certain stats every week, every month. But there's a lot out there that we need to just understand that we have to stay on top of it. That's the whole point. Now, really quickly, looking at the price of oil, looking at commodities, looking at food, things are getting expensive. Now, what can you as the individual do? Well, I think it's important that people get on top of this now. Maybe I should do an entire opinionated video about this because I do think it's important. Some would say, if you buy, like I mentioned in the previous video, 100 packs of pasta, what you are doing is ruining it for everybody else. And you could argue that point, and I'd like to know what you think. And I only use that example, just food that stays well for a long period of time, beans and rice and pasta and so on, even if you don't want to eat it, okay? I think right now we need to realize that we have a situation on our hands that the government's not going to be there to help us. We have to be aware of that. We have to help ourselves, our neighbors and our friends and coworkers, and these people largely are unaware of what's happening. We've got to be ready and prepared, and whatever that means, we have to do it. I would love to break this down further and rant on about it. We'll see. Perhaps I'll do a video. If you appreciate the information, support the channel by hitting that like button. It's right down there. Less than 10% of people will actually hit that button. So I do appreciate those people who do. If you haven't seen this video yet, you definitely want to check it out, all right? So just click it and I'll see you there.